The ECB have set a very low bar for inflation surprises. James Rossiter, TD Securities. The Bank of England will release its inflation report on Thursday. James, will we see any major changes to the economy from the data?
The Bank of England is likely to play it safe this week. At the end of the day, I think we're going to see a 9-0 unanimous vote in favor of no change to policy. The big thing for the Bank of England and the Monetary Policy Committee, of course, is the UK referendum. It's coming up in just 45 days, and I think in the final few weeks before the vote, they're going to want to play it very safe on the policy front. They've had plenty of opportunities already to express their view in terms of how they see the referendum affecting the UK economy. They published a very thorough assessment back in October of 2015, going through some of the ways that the vote would impact both financial stability and their ability to meet the inflation target. And we've seen many members of the decision-making committees there appearing before the Treasury Select Committee at Parliament, discussing sort of their views, their own personal views, as well as the institution's views on how the referendum might affect the UK economy. So I think at this point they've had a lot of opportunity to discuss these, and as the vote does get closer and closer, they're going to want to become a little more cautious in terms of what they're saying. That said, we're starting to see evidence of the referendum weighing on the real economy in the UK, and so I suspect they will still try to take this opportunity to talk a little bit about the deterioration in the data we've seen in the last couple of months. In particular, if we look at the PMIs for both the manufacturing, construction, and services sectors, we have seen deterioration since earlier this year, with all three indexes lying very close to their 3-year lows. This is starting to signify that perhaps worries about the referendum are starting to leak into the everyday economy, not just in the manufacturing sector, but also in the construction and services industries, which are much more domestic facing. This will be something that they'll need to be cautious about and need to assess fully in terms of how much of this is the referendum weighing on these surveys versus is there actually an underlying deterioration in economic conditions that they need to acknowledge. It's my view that this is very much coming from the uncertainty caused by the referendum, but if the Bank of England sees things differently, then that could set a slightly softer tone for the year and may lead to downgrades in their UK forecast.
The US retail sales ex-autos will be released on Friday. Are you expecting a bullish movement from the US dollar?
The March retail sales report was quite soft, and so if we see another soft report here, I think this does start to increase worries that perhaps momentum has slowed in the U.S. economy a little bit more than had been anticipated. This would definitely be negative for the dollar in that sense. But we actually see reasons to believe that the numbers should be a fairly healthy print. If we look at April data, we saw auto sales were up 5%. Gasoline prices were also up about 5% as well. And so the retail sales number on the whole, we actually expect a gain of about 1%. Now, of course, we can strip out some of these special factors. We can strip it right down to its core measure. Here we're looking for something a little bit more muted, a gain of about 0.3. But again, this would be a pickup based on the March softening that we saw. So it would be a sign of momentum coming back into the U.S. retail sector. I think this would be reassuring to investors and to policymakers there. It would take perhaps some of the slowing risk off of the table. But that said, markets are expecting this core measure to increase by 0.3. So if it comes out as expected, not a big move on the dollar. You've certainly seen investors scale back their expectations of Fed policy hikes this year. TD Securities expecting just one hike for the remainder of the year. We're looking for that to come in September. Whether or not we see a good print in the retail sales report on Thursday, I don't think that's going to change expectations of policy too much for the year as a whole.
Following the ECB slashing their growth forecast for euro inflation, how do you expect the euro currency to react?
We look back to the March macroeconomic projections released by the ECB. In our view, they've set a very, very low bar for inflation surprises going forward for the remainder of this year. When we look at the currency right now, we're looking at about $1.14 against the US dollar. There are a number of reasons to think that this might actually come down a little bit in the next few months. Before it starts to turn around, we're looking at sort of sitting around the same level right now at the end of the year. I think the inflation forecasts have been a big part of the ECB's policy decisions this year, when they saw deterioration in expectations and lower oil prices through the turn of the year, this was one of the factors I think that led them to introduce the significant easing policy in March. But that said, their inflation forecast was based on an oil price assumption of $35 a barrel for this year. When we update this with the futures prices as they stand today, we're looking at about $45 a barrel. This is quite a big difference, and their inflation forecast of 0.1% for 2016, when we just feed that through mechanically, would be revised up to about 0.4% for the year, followed by about 1.3% next year. In my view, I think we're likely to see this inflation forecast get revised up in June, and generally speaking, the shocks as they come in are going to be more supportive of a positive inflation profile. This should help support euro to an extent. I think, in many ways, the forecast in March was so low that it took out a lot of the downside risks, in a sense, engineering a continuous stream of upside risks. But that said, there are a lot of uncertainties beyond just their forecast for inflation over the near term. I mean, certainly with the UK referendum coming up, any fears of spillovers will weigh on euro.
Thanks for your insight today, James.